Hello and welcome to LAT's Weekly Market Insights. Trump, who spent 3 days in a military hospital after being diagnosed with COVID-19 last week, called off talks this week between the White House and the US House of Representatives Democratic Speaker Nancy Pelosi on the new fiscal stimulus package. However, the president has partially reversed that stance, saying he would support piecemeal legislation to provide funding for small businesses, airlines, and stimulus checks for individuals. The chart in focus this week's euro dollar, which finds itself at a real critical moment. Now, the dollar's been softer off the back of this news, allowing euro dollar to break through key resistance at this 117.80 handle. We can also see here this monthly pivot and weekly R1 pivot point respectively, both acting as resistance where we saw multiple failures. Now, early this morning, we've now seen a break through that level and a close. However, key resistance lies just ahead. We find ourselves at the moment in this hourly uptrend, posting higher highs and higher lows, and certainly a break above that would suggest potential further upside moves for euro dollar. However, should we come out to the higher time frame, we can start to appreciate the severity of the resistance ahead. This 4-hour established downtrend perfectly pulling back to the 61% Fibonacci retracement. That also falls in line with this big psychological 118 handle. And of course, the primary October highs also acting there as key resistance. Now, whilst we've closed above here, above the 200 period moving average on the 4-hour chart, when we take this out to the daily chart, we can see that 50 period moving average acting perfectly as a dynamic resistance level, again in and around those key areas. Should we see a break through all of this resistance, that certainly, as mentioned, suggests potential further upside. If not, and we see a failure at these highs and a move away from that 118 handle, we could certainly look to trade this as a double top formation and a reversal of this counter trend. A break through the neckline and this previous higher low could open up further downside pressure, and we'll be looking down again back to the lows at 116.20 and the 116 psychological round number. Really interesting to see how this chart unfolds, and no doubt we'll revisit this to see if we can break this resistance and continue higher, or if dollar continues to act more as a safe haven and we see this move back lower. As we look to home soil, COVID cases continue to surge, with 17,540 new cases being reported on Thursday. The Medical Director for Public Health of England, Dr. Yvonne Doyle, has commented, "We are seeing a definite and sustained increase in cases and admissions to hospital. The trend is clear and is very concerning." This ever-growing threat, combined with lower than expected GDP figures, could cause concerns for UK assets. As we come across to FTSE here, I'm going to remove the pivot points, I'm going to remove the moving average, and we'll concentrate solely on the primary support and resistance and the trend. As of yet, we're not seeing this potential concern reflected in UK assets, as both FTSE and sterling remain bullish. FTSE here showing signs of a potential reversal of this downtrend as we fail to post the new lower low. For now, a move back to 6100 level looks likely, but with Brexit and ever-present threat of COVID cases escalating, FTSE will have its work cut out if we are to see a break of the highs up here at 6124 and therefore cancellation of the downtrend. For now, we remain bearish, however, looking for key resistance for that next opportunity to potentially short FTSE. As we look to next week, focus will no doubt remain on the presidential election and any progress towards a stimulus package. The economic calendar is set for a slow start to the week, but will pick up in intensity as we move through to Thursday and we come into a day of employment data for Australia, China, and the US. That's all from us here this week, LAT. Have a lovely weekend and please do join us next week for another Weekly Market Insights.